Hey everybody, welcome back to Know Before You Owe. Brian Parker and the Brian Parker Group. Today we're going to talk a few minutes about your annual escrow analysis and what does that mean for you and what should you expect and all that, because we do get a lot of questions from consumers about like, okay, what if I have too much in my escrow account for my taxes and insurance, or what if I don't have enough? And so each year, generally around April of each year, your mortgage servicer is going to send you an analysis of what's in your escrow account, how much is in your tax escrows, and then how much is in your insurance escrows, and then what that projected balance will be when it's time to send your renewal premium in to your city or county tax office or your insurance agent. If there's more than a certain amount of cushion that's in that escrow account that creates an overage, the mortgage company will have to refund it back to you. They do keep about a 2-month cushion of each for tax and insurance in that. So should you have fluctuation in what your yearly tax bill or your insurance premium might be, hopefully it would cover that. Now, if there's a shortage and you're going to be short of being able to pay your tax bill or your insurance bill when it comes due, you're typically going to get 3 options to correct that shortage going forward. And really, there's only one way that's the best way, so to ensure you don't have a reoccurring shortage next year when you get your next escrow analysis and everything that comes in. So the first option they'll send you is send us a check for the difference, so we'll have enough to renew your taxes and insurance going into next year. That's great, you can do that, but that doesn't do anything to adjust your payment going into your escrow account, so to ensure that you don't have a shortage again next year. They will also give you an option that says, okay, we're going to increase your payment by this much that will cover making up the shortage you have for your taxes and insurance. But by doing that, that is likely to create, going into the following year, and if not the following year, probably at least the second year past that, where you would then have an overage, because they have corrected your payment high enough with your taxes and insurance escrows that it's going to make up that shortage very quickly. So they've got enough to pay that when the next bills are due. So the third option is typically your best option to take. And that's going to be, send us a check for the escrow difference so we can have your account current to pay your tax bill or your insurance bill when it's due. And we want to increase your payment by this much. So when your renewals are due the following year for your taxes or insurance, there is enough in your escrow account to do that. Keep in mind on your mortgage, the principal and interest payment, that won't change. If you're on a fixed rate mortgage, that won't change. But you should expect, in the current environment, the current economy, the way insurance premiums are right now, that your tax bill or your insurance bill is probably going to increase on average every 2 to 4 years, depending on your location, the type of policy you may need to have, and so forth with that. So that's your annual escrow analysis and your 3 options you get on how to fix a shortage if you have one. I'm Brian Parker with the Brian Parker Group. Please reach out to me if you have any questions. If not, find a local lender in your market. I am in all 50 states. Look forward to seeing you next time. God bless you. Have a great day.